I guess to kind of add a unique commentary to this, my background, I spent about 10 years at Goldman Sachs down here on Wall Street, mostly in the equity products group and capital markets. And previously, I had lived in Zimbabwe in the late 90s. And for me, the opportunities that we've discussed here today and the extraordinary, future growth in Africa, it was always cognizant in my mind. So jumping into a role on Wall Street with Goldman Sachs, I thought it'd be a year or two, bang through an analyst program. 10 years later, I was still stuck in a trading desk. And for me, it was the timing of when the transition into Zimbabwe came, when Zimbabwe, the unity government was formed, dollarization happened, and for me, that was the catalyst to switch. But there was also, when you look at the relative opportunities, and someone like myself who has always been keenly focused on opportunities in Africa, I'd sit around some of these meetings with hedge fund investors, and I'd bring our famous Rick Sherlin to a dinner at a fancy steakhouse, and we'd sit down with 10 hedge fund managers, and these guys would sit and, I'd listen to these guys argue about, how to buy Microsoft into earnings. And these guys would just argue and yell at our analyst, and, I'd sit there and I think, none of these guys are gonna get it right. It's too hyper efficient of a capital market. If they get the fundamentals right, one of these knuckleheads is gonna trade it wrong. They're gonna sell it at the wrong time, they're gonna buy it, they're gonna trade the wrong product, they'll try to do some options. It's a very difficult scenario to make money. And for me, if you're looking for a way to make money, you need a competitive advantage. And you just tell these guys, well, I remember at one dinner I said, well, a competitive advantage to me is, go grow oysters off the coast of Namibia. You can do it 3 times faster because of the nutrient-rich ocean out there. Like, that's a real competitive advantage, not trying to figure out who can do themselves buying Microsoft into earnings. And like another example is, in 2006, 2007, I'd take a lot of real estate investors around, a lot of the primary REIT investors, and when you would listen to these guys argue about cap rates, real estate investing is obviously highly quantitative in the REIT world in the US, and these guys would be, they'd be doing deals at negative cap rates for the first 2 years. Stuytown blowing up was a brilliant example of, just who decided to actually do that. At the same time, you look at, you explain to these guys, well, how about a place like Zimbabwe where, you look at the real estate market there, it's tremendously undervalued. Hyperinflation wiped out everyone's mortgage debt, so everyone owns their own home. And there essentially is a fledgling mortgage market restarting. So the relative opportunity for me was very simple. So I decided to leave Goldman Sachs, started my own advisory firm about 1.5 years ago with a partner of mine, and we recently folded that into Renaissance Capital. So very quickly on Renaissance Capital, I think the key point that I want to convey to the audience is, the niche that Renaissance provides. I think a number of people in this room are probably affiliated with Renaissance or have done business with them in some capacity. I'm focused exclusively on Zimbabwe, but the way I view how Renaissance can provide kind of a little bit of grease in the capital markets and investment into Africa that we've been talking about all day is, so we provide an equity products group where if one of the big listed entities wants to invest, we provide a broker solution. We provide the execution capabilities. So, we have all the local contacts on the ground. We have a presence across a number of the countries, and so, we provide those relationships on the ground. On the investment banking side, we provide, foreign businesses the ability to come in and, we will host them. We will provide advisory services, the proper platform of investment banking. And then in asset management, we have a fledgling product offering of Zimbabwe products. We've structured recently a Zimbabwe ETF that's actually open to US investors that we're going to start marketing. And we're going to have a Zimbabwe Opportunity Fund that we'll probably offer. So really what we try to provide is, for foreign capital coming into a country like Zimbabwe, we really try to provide a bucket for every single way that they could come in. If it's a listed fund and they need to execute on the local stock market, we provide the brokerage services. We have the relationships with local brokers. If they want passively managed products, we need to provide a basket or a menu of thematic, actively managed passively managed funds from their perspective. And then the investment banking side for corporations who want to come in and invest in companies, we need to be able to provide any type of advisory service. So, for me, it's exciting to go from 10 years in a hyper-efficient capital market system to go and now apply everything that I've attained to a market like Zimbabwe, because the opportunities are absolutely enormous. I mean, everyone likes to talk about Zim. Jeff's very experienced there with his company. It's a matter of time, but people were saying Kenya, Nigeria, Zimbabwe will eventually get there, and when the time comes for the big proper capital to start coming into Zimbabwe, in my role in Renaissance, we want to be able to provide the service to, hold the hand of all those investors coming in. So that's really the niche that we provide.
Questions regarding the Zimbabwe Stock Exchange and what your views are on that, on its development maybe to an electronic platform, and how that might help the country as far as foreign investment?
If you go back, some of the comments earlier today were saying that some of the few ways to actually invest in Africa 20 years ago, 30 years ago, were you'd really go in through South Africa or Zimbabwe. I mean, Zimbabwe's got a stock exchange that's about 100 years old. There's 84 listed stocks. The market cap's about 3.7 billion, but it is one of the oldest stock exchanges in Africa. I think it still is a bit of a relic call-over system. I think when it does go electronic, hopefully it'll be part of a larger platform where it's integrating into a more regional trading framework. But I think when you look at Zimbabwe right now, obviously it's a country that's coming out of 10 years of economic malaise and depression. It has kind of taken a little bit of a second dip because of the indigenization legislation. So I think if you go back a year and a half, Zimbabwe's kind of still where it was from a equity market standpoint. I think that's one of the reasons we're going out pretty hard pitching this Zimbabwe ETF, because there is a lot of investor appetite. I think what's going to happen in Zimbabwe is Zimbabwe essentially has this massive hovering cloud of interested parties and capital sitting over top of it. It's a relatively small market, so because it has so much interest, I mean, there's a lot of people following Zimbabwe. There's a lot of investors that are flying in and flying out, but it's all kind of pent up right now. So I think Zimbabwe is a very simple strategy. If you do like the country, if you do like the opportunities that it presents, it's one of these things where you just have to find the right product, find the right way to get in the country, whatever that is, and make it a longer term play. It's got to be a several-year play. Because once that catalytic event does come in Zimbabwe, there's going to be a massive rush of capital, and you're going to see asset inflations in a whole bunch of different areas. So it's going to be fast and furious, and if you're not invested at that time, it's really too late.
Are you working very closely with the central bank to ensure that any investor that goes into Zimbabwe is able to repatriate their funds? Because there are a lot of investors that certainly over the years have gotten burned with the inability to repatriate their funds for a number of years.
Zimbabwe is actually at a very unique point right now where you could argue that because it's a dollarized economy, there's zero currency risk if you're a US dollar investor, of course. And you can take money in and out relatively freely right now. There are no FX restrictions for the most part. I don't think it's always going to be that way. I think eventually if SADC goes to a common currency, you will see Zimbabwe's dollarized economy fold into a SADC currency, whether that's going to be the rand, most likely. I would like to see the dollar stay until that event. But I think right now Zimbabwe provides a very unique situation where you don't necessarily have currency risk. You can take your money in and out freely. I mean, we were basically pitching to a hedge fund investor here where we were offering him an 18% return based in Botswana. It was a bank that basically has operations in Botswana and Zimbabwe. If they were willing to take the risk, your basic credit risk for a one-year CD at 18% is Botswana sovereign risk and then also counterparty risk to that lending agency. So there's a lot of creative ways you can get the return and capitalize on that, risk gap right now in Zimbabwe. But I definitely encourage people to take a longer term view. These kind of markets, if you try to trade in and trade out, it's a much more difficult thing to really execute. I mean, my opinion on Africa overall is people that can execute and get things done, pay them whatever it is, in commissions, fees, whatever, because the ability to execute is everything. And I think, you know, the shorter time horizon you have, you're just going to make that much more difficult. But, you know, I think from a long-term perspective, the risk is much more minimal than it was, obviously, compared to hyperinflation. So, you know, it's amazing. You go to Zimbabwe right now, and you know, my mother growing up, she would always stuff $2 bills if we ever saw one in a superstore, a supermarket, anywhere. You go to Zimbabwe now, somehow, there's $2 bills all over Zimbabwe. So I don't know what commercial bank was sitting on crates of these things, but someone dumped them all in Zimbabwe. I mean, it's, you know, it's a very free market thing to have happen. But I think whatever journalist gets a hold of that story as to which, you know, bank in the U.S. decided to distribute $2 bills to the Zimbabwean market, I think would be a really clever story to get a hold of. But I think long-term, to answer your question, I don't think there's too many risks compared to what it was previously.
Doing business in Africa. You can't afford to be without Africa Investor.